Joules revealed a dramatic plunge in profit to just £1.7 million today as it took a £6.7 million hit to close stores and relocate its head office in the 6 months to the end of November. The figures Joules booked an 82% drop in profit before tax from £9.3 million this time last year to just £1.7 million for the first half of its current financial year. The French fashion retailer blamed a late Black Friday but also forked out £6 million to close more than 4 underperforming stores and relocate its head office. Extending its distribution centre lease also cost it £700,000. Joules had already warned full-year profit would fall far below a forecast £16.7 million due to supply issues, triggering a 20% drop in its shares. A revenue decline of 1.4% to £111.6 million year-on-year compounded the decline in profit as Joules blamed a late Black Friday that fell outside of its first half. If Black Friday had been included, retail revenue would have risen 3.1%, the firm said. Joules announced £2.1 million in net cash, a fall of £2.2 million due to spending on its head office, while its gross margin was steady at 54.8%. The retailer will pay a slightly higher interim dividend of 77p per share despite revealing a steep decline in earnings per share from 8.3p last year to 1.3p. What Joules said. Chief Executive Nick Jones said Joules delivered a robust first half sales and margin performance in line with expectations, which was pleasing in the context of a challenging consumer environment and widespread discounting by other clothing brands and retailers. During the period, we invested further in our infrastructure and customer proposition in order to support long-term sustainable growth. This included the rollout of our new point-of-sale system across our store estate, enhancing the future profitability and flexibility of our store channel, progressing our new head office development, and launching our Friends of Joules marketplace. Post-period end, this investment has continued with the announcement of improvements to our future logistics capability in the UK and US. Since the period end, we have updated on our disappointing Christmas trading performance, resulting from a stock availability issue impacting our online channel. We identified the root cause, have taken steps to rebalance the allocation of stocks between channels for spring/summer 2020 and are strengthening our underlying processes. I am reassured by the performance we saw in the retail channels where we had good stock availability and by our continued online traffic growth, evidencing the strong customer demand which continues to exist for the Joules brand. For more on this story, visit the news article link.